Morning, market chameleons. How's everyone doing on this Thursday? Dima, how are you doing?
Good morning, Will. How are you doing?
Good. As good as can be expected. Yesterday was a little unsettling, I must say, watching the TV. But, these markets continue to move forward, which is very, very interesting. I didn't realize the last 3 years of World War II. What do you think the U.S. stock market did?
The last 3 years of World War II?
Yeah. And it was still, until the end, it was, you didn't know that necessarily the U.S. was going to win, right? It wasn't until the last year that really the tide started to turn.
Well, imagine, the government was spending and, producing, because America's like one of the biggest manufacturers at that time.
You're too good. You're too good. Yeah, it went up. You're in a world war and bombs are being dropped. I mean, the stuff you're seeing on the news, I mean, there's some good news, some bad news, but the market continued to move forward. That doesn't mean this market will, but it's, I was so bearish coming into this weekend and the election and everything, and market keeps moving forward and like worst possible scenarios happened. It's very cool. But before we get started, why don't I share the screen and we get started with a disclaimer. What do you think?
Yep. So good morning, everyone. Thanks for joining. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's a disclaimer, everyone.
Excellent job, as always, with the disclaimer. What are you seeing this morning?
Yep. Let's take a look. Let me share my screen. Let me know if you see my screen, because something funny was happening when I was trying to do it.
Yeah, it's good. See the morning.
So take a look at the pre-market movers. We'll see what industries were doing well yesterday. Performed well on a relative basis. We'll take a look at. We pushed out the implied volatility seasonality chart. The first version, not the full version, but the initial version. So we'll take a look at that. And I think we'll also take a look at the implied volatility movers. So if you have any questions along the way, will stop me. I'll try to get to the questions and answer as many as I can.
Great.
During the show. So these are stocks trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I'm going to filter first and see what's going on in the higher market cap stocks. So let's take a look at stocks 20 billion or higher. So you have 50 that made the percentage gainers list, 10 on the percentage decliners list. So there looks more favorable to the bullish side than bearish side. NIO up 5% in the pre-market hours on 1.7 million shares. Don't see any news as of yet on the alerts. Baidu up 3.5%. Taiwan Semiconductor up 3.3%. These are lower volumes, 90,000, 44,000. Let's take a look at stocks that are making 52-week highs in the pre-market. So let's just filter that real quick. I got 8 right now making 52-week highs. Taiwan Semi sticks out. Tesla, that's making, if it opens here, a new 52-week high. It's up 2.8% in the pre-market. Morgan Stanley, Goldman Sachs. So we said the banks were doing well. Goldman Sachs now 52-week high. If it opens up here, it's up 1.5% in pre-market. So let's I'm going to just use this filter as an example and see how stocks in a similar situation in the last 2 weeks, how they performed after the market opened. So let's take a look at market cap 20 billion or higher, stocks that were making new 52-week highs at the open. What happened to those stocks after the opening? That's what we want to take a look at. So I'm scrolling down here to the list below. And here what we have is a list of stocks that gapped up in a pre-market. Okay, so there's two lists, one gap up, one gap down. So right now we're looking at stocks that gapped up at the opening, and we have a list here with the dates, You see there was 3,407 in the last 2 weeks. The dates, the symbol, name of the company, the industry it's in, market cap, pre-market volume. So we see in this example, VMC, it opened at $156. That was up 5.7% gap in the morning. By 10 a.m., it was 161.62. So from the opening, it gained another 3.6%. Close of the day, it closed at 160.75. So it was higher than the open. By the close, gained 3.1%. So this is a total list of the gap up movers in the last 2 weeks. So we see here, let me unfilter this first. So if we took all the stocks, 45% of them by 10 a.m. were up from the opening price, 54% of them were lower. By the close of the day, only 41% finished higher from the opening price, 58% lower for negative 0.4% on average loss. So let's take a look at stocks like the ones we just filtered. Market cap 20 billion and opened at a new 52-week high. What happened to that group? So here we go. Market cap 20 billion, open 52-week high. Okay, so let's see how many there were. 107 of those scenarios. So we see here, compared to the rest of the group, 64% of those from the opening to 10 a.m. were higher. So from opening price to 10 a.m., first half hour of trading, those finished higher, 36% lower. By the end of the day, only 48% of them were higher, 52% lower for an average gain of 0.1%, but that's still better than the benchmark of 41%, right? All of them 41% finished higher by the close versus this group 48%. So I'm just going to take a look real quick, some of these. So you see Tesla comes up. So let's just take a look at Tesla. I'm going to filter that one because Tesla's on that group today. So we see that in last 2 weeks, right? Or it's not, actually not last 2 weeks. I'm sorry, last 20 trading days. So more than 2 weeks, last 20 trading days. Tesla opened at a 52-week high 3 times. So we see out of those 3 times, these were the opening gap moves. By 10 a.m., 2 out of 3 times it was lower, 1 time it was higher. By the end of the day, 2 out of the 3 of those days, it finished higher, 1 time slightly lower. So it looks like, there's more follow through when we're just looking at Tesla. Let me just unfilter 52-week high, see how many times Tesla was on the gap. So 1, 2, 3, 4. So 5 times Tesla gapped up, made our gap up list in the last 20 trading days. So we see here by 10 a.m., 3 of those, this one's unchanged. So it's about 50-50. 1 time it was unchanged, 2 times it was up, 2 times it was lower. By the end of the day, 3 out of 5 times it was higher, 2 times it was lower, and it looked like, at least the gains to the upside, the magnitude was more than the magnitude to the downside. So you see about, 3.5% gain here, 3.7%, 1.4. 1 time it was down 1.7, down 0.3. So that's just quickly distribution of returns when it gapped up in last 20 days. So that's in Tesla. Just to get to more reports, if there are no questions on the pre-markets, I'm going to move on and see, take a look at some of the other reports.
Sounds good. Okay.
Let's see a breakdown by industry. So I'm going to go performance by industry here. So here we got a list of industries. So here's the name of the industry. These are classifications by Morningstar. That's where we're getting them. This is the number of stocks in that industry. These are the percentage of stocks in that group that were up yesterday. So remember, we're not open yet. This was yesterday's that were up yesterday, percentage of them that were down. This is the median return in that group. And then we got the historical median returns and the fundamentals over here. So let's just sort by best median performers. So we got, this one only has one stock in it. So solar, that made the list. And again, you know, we've been seeing these solars popping up a lot of times on this list. But you could see here, 18 stocks in that group, 94% of those stocks were up yesterday. Median gain 7.8%. So if we open it up, these are the stocks, the solar stocks in that group. I'm just going to take a look at best performers. So we got SunPower up 20% yesterday. That's a $5 billion market cap stock. RUN up 16.5%. SUNW up 16.2%. So some pretty big gainers yesterday on that list. Metal fabrications, you know, we've been talking about the metals as well. They've been popping up there already, you know, pretty consistently. 14 in that group, 86% of those stocks were higher yesterday, 14% lower, median gain 7.1%. Let's just take a look at that. And filter it by best performers. And WPX, smaller market cap stock, 297 million, up 11%. AP up 9.1%. So some of these are, you know, lower cap stock. I mean, most, maybe this one, let me just do by highest market cap. PRLB, 4.3 billion, up 4.3%. Aluminum stocks yesterday, 5 of them, 80% of those were up. Let's take a look at those. You know, so best performer in that group, CENX, KALU up 8.5%, CNX up 12.1%. So that's really quickly just kind of where money was flown yesterday by industry. If you have no questions on that, Will, I'm going to move on so I could show some of the new features.
New features, awesome. I better go into the Discord and let Jake know.
Yeah. So I think I showed this before, but we didn't push it out. I'm going to just use SPY as an example. And I'm going to go here to volatility and seasonality. So we're going to take a look at seasonality chart of the implied vol. So this is where you'll see the top part right now. You know, we built some insights to help out with what's going on here. And there's a table here below. And this part I'm still working on. So this part I didn't push out yet. So here what we're seeing is this is how a seasonal implied volatility chart. Basically in SPY, it's going back by year. So see in January, and it's looking at taking the average of the implied volatilities in the last, I think, what is this, like 6 years, you know, for each day to see how implied volatility trended throughout the year. Okay, so this isn't a 1-year chart. This is a seasonal chart, right? We're overlaying, you know, all the January 1st, all the January 2nds, taking the averages. So we could see here, you know, how implied volatility progressed. Now we see in March, this was this was pulled up because of, you know, the corona. So we see this 2020 really pulled it up. So we're going to compare the median implied volatilities instead, because the averages could get pulled one way or the other by extremes. So we'll take a look at the median implied volatilities. So this is one thing I'm going to remove the option volume just to make it easier to view this. So we see here implied volatility is around 20. That puts it in the 39th percentile rank. So what does that mean? If we measure implied volatility levels in the last year, daily closing implied volatility levels, that if we take 20.2%, 39% of the last 252 observations were below this level, and 61% were above this level. Okay, so you see compared to the last 252 days, Remember, that's including the coronavirus. It looks like it's moderate, right? Low, it's below the 50th percentile rank. But remember, we're comparing it just to itself in the last 252 days, which were very high volatilities historically. So how does this right here, this historical chart, compare to where we are today? So see, this seems pretty low, but let's take a look at today's. This is where we are right now. This year, right, we only had 7 days. So you can see how high we are from those long-term averages still. Does that make sense? So here, I'll show you an example. Right now, we're at 19.9. This is January in 2021. But if we took the median implied volatility in January, historically, we're 13.8. All right, I think there's one time where 2016 higher than this, 20.6. All right, so so you have two different metrics, right? One comparing it to itself in the last year. The other one is a much longer term average. And this is where we are today. But you could see also how it tended to progress throughout the year. So here from January to February tended to move lower, into March moved lower, April moved lower, May, and then started coming back up in June. That's how the implied volatility tended to react in SPY. October.
AD, can you just very, very quickly, again, we've had some new chameleons hop on, and they just want to reiterate how you got here. Just so everyone knows, this is a new feature within Market Chameleon, and some of the things you'll see are only available to the crew inside, or still being developed, but some of it is available now. It's a premium feature, correct?
Yeah, so we did, I think we gave some insights. So I think people will be able to kind of read those insights. The rest of the data will be for premium. So if you wanted to see all this data, then that would be for the premium users, but we did give some insights. So if you go here, like for example, here, October, the implied volatility tended to reach the highest point, and the lowest point tended to be in July. Right, so here, let's take a look here. Here's October.
They wanted to know how you actually got there from the landing point.
So if you go to the symbol, any symbol, you type in here, you have this menu on the left hand. This is under volatility, and it says seasonality right here.
Perfect.
Okay. Again, here, highest point, this is telling us tended to be in October. So here's October, median implied volatility 14.3. So from a median perspective, October was tended to be the highest. But here in March, if we just look at the very high, because of this 220, hit that big mark right there, 52. The lowest marks tended to be in July. So October the high, July. Let's take a look here. That's where the median was 10.7. That's where it hit the lowest mark. And historically, from January to February, it tended to move lower. All right, so from this month to the next month, tended to decline. So those are the insights you get up here, right? If you wanted to then start looking at the chart and the data, that will be in the premium feature. Let me just take a look. I didn't push this out yet. I'm still creating the insights, but here's the month of January. So we see at any point in January, the high mark it reached was 24. So here in 2016, in the month of January, it reached the size 24. The low mark, 11.7. So in 2017, sorry, the low mark is 6.8. The lows in 2018, it got as low as 6.8. So you could see that pretty large range there, but we're right here on the higher end. 19.9. So just giving you a perspective from a longer term historical level, you have two ways to compare it versus the last year, then versus a much longer history, how that implied volatility levels look like. If there are no questions on this, Will, I'll just move on to the implied vol movers.
Yeah, actually, people asked for that list.
Okay, so I'm going here. Sorry, under options, implied vol movers. So what we're looking at now is a list of at the money implied volatilities and the straddles, at the money straddles in the different expirations. And you got the symbols, the name of the stock, price of the stock, percent change, and market cap. I'm going to just filter out these lower price stocks here. So let's go to stocks above 10 bucks. Okay. Then we have the expiration. We have all these different expirations, trading days to expiration. This is that the money vol. This is what that the money vol did yesterday. It was up 13.5%. This is the amount of option contracts that traded on this expiration. I'm going to just, to make it easier, let's go to the February expiration. So we'll just concentrate on one expiration. So let's do Feb 19. All right. So now we're Feb 19 expiration. This is days to expiration 31. This is the implied volatility. What it changed that this here is the straddle, the implied move based on the premium in the straddle. So if you're buying a call, buying a put, this is implying that it will move 55% by Feb 19 expiration. Okay, that's the straddle. That's what's implying. Historically, the stock on average moved 31.7% in a 31-day period using 6 years of data. Okay, so this is actual historical moves, the average versus the today's implied move. This here is the ratio implied divided by historical. So we see it's right now implied is 1.7 times its historical average. All right, let me know if you have any questions.
I will.
This is the highest move it made in the last 6 years over a 31-day period. And this here is the ratio if we take the implied move divided by the highest. So let's look at, I'm going to filter by market cap just to see what's going on in the higher market cap stocks. So here's Apple, February 19th expiration. Straddle's implying a move of 11.1%. Historically, the stock moved 9.7% on average. So we see that ratio implied divided by the historical average move 1.1. Microsoft, the implied move right now, 8.6%, February 19th expiration. Historically, on average, it moved 7.6%. So that ratio, 1.1 times its historical average. Amazon, that's more in line, 10.6% implied versus 10.4% historical average. So that's kind of in line. Google, 8.8% right now implied move versus historical average 8.2. So again, 1.1. So they're very close, at least, the top, the top five. I see Facebook slightly higher. So we got an implied move of 11% compared to a historical average move of 8.2%. So we're 1.3%. Tesla here, 19.4% implied move, February 19th expiration. That compares to a historical average move of 16.8%. So that's 1.2 times its historical average. Alibaba coming in a little bit. I think this was, I saw this much higher a couple days ago, but 12.3% implied move by February 19th expiration compared to historical average of 12.2%. So like kind of right in line there. Taiwan Semi, I think we saw this one. It's making a 52-week high right today.
I think it is. Yeah.
That's implied move of 11.1% compared to a historical average of 8.8%. That's 1.3 times its historical average. Let's take a look at the ETFs. ETFs, SPY. So Feb 19th, the straddle right now implying a move of 5.6%. That compares to a historically, it moved 4.7% on average over a 31-day period. Remember, using 6 years of data. So that ratio, 1.2. QQQ, similar 1.2 ratio. We got 7.4% implied move compared to a historical average of 6%. That's 1.2. Gold, a little bit higher. So gold, we have an implied, the straddle is implying a move of 5.4%. Historically, it moved 3.6% on average with a ratio of 1.5. Let's do one more IWM. We see here February 19th expiration implying a move of 7.9% in either direction. That compares to an average move of 7.2%. Historically, that ratio 1.1. Are there any questions, Will, coming on this one?
Is there a way to filter both implied? It's Robert Black is asking, is there a way to filter both the implied move and historical average at the same time? So as to get the highest or lowest? That's the question.
Like the ratio? He means like this ratio?
I'm assuming he means the ratio.
The comparison of the implied move.
You know, obviously you can only click one header, right? So you can only organize it by one header at a time. I'm assuming.
Yeah. But you could do right. So you could use these filters here. You could also just, if you're just looking for, let's take a look at higher market cap. All right. So I just narrowed it down to 12 just to make it easier. So if you just want highest implied move, you could do it by highest implied move, right? 7.9% IJR. Historical average move, you could filter there, or you could, sort by that, or you could sort by the ratio. So if you want to see the ratio of this is on a relative basis, the ratio of the implied move divided by the historical average, so 1.7. So we got healthcare. This is in S&P, right? Select Spider, the healthcare ETF. That's looking at, on a relative basis, 1.7 times its historical average. So the implied move 1.7 times its historical average. So that's just really quickly how you could do it that way.
Got you. Now, I missed it, but TSM was showing up in the list as what was the vol showing in TSM?
So let me see. I think it was on this TSM. Let me just filter it out. TSM. So TSM.
Taiwan Semiconductor.
Taiwan Semiconductor. I put in a search here so you could see here right now. Remember, this is as of yesterday's close. We're not open yet. As of yesterday's close, the straddle was implying a move of 11.1%. The historical average move is 8.8%. So that's that ratio, implied is 1.3 times the historical average move.
Gotcha. All right.
Right. So, and they are coming, I'm just seeing there is an event they have coming up January 8th. So I don't have the next earnings yet, but the January 8th, that's tomorrow, looks like they're releasing some kind of monthly sales figures for December. So there is an event coming up in Taiwan Semi.
Yeah, no, these chips have been flying. I just went and looked at, because I read a piece on Micron yesterday talking about their DRAMs. And so I just went and looked at the trade ideas, and there were some things of interest popping up. But for me, thinking about, but I was looking at, it looks like that straddle then to me maybe overvalued right now. So anyways,
right. But you got to keep in mind, like there is an event coming up.
Yeah, and listen, options, if the things at a 52-week high, you can buy the stock, or if you like me, if I'm looking at it from a bullish perspective, you know, I would prefer to use an option and know my, you know, rather than putting all my money into one stock right now. So anyways,
Yeah.
Cool.
All right. Well, if there are no questions, well, we're right up against the bell. So, again, everyone, thanks for joining us today. Stay safe. Have a good trading day.
Awesome job, Dimitri. They love these tools. Keep bringing them out to the Chameleon community. They love them. Thanks so much.
Awesome. Thanks, everyone.